Welcome back, humble traders. Today I'll be doing a technical breakdown on Twitter, ticker symbol TWTR. Before we begin, remember to take a second to give the video a like and subscribe, as it will greatly help out the channel. Do note that I do not provide any buy or sell calls, but focus on the potential traps laid out by the market makers. Without further ado, let's take a look at Twitter. So Twitter seems to be having some news regarding acquisition and buy over. But looking at the charts, it doesn't look really too good. You can see that on the day itself, there was already some buying up volume before the news release. So you can see that insiders were actually already buying up. So there was some signs of leaking of news. And thereafter, there was a very strong gap up on the day of news release. However, if you notice that on the day itself, even though we gap up, we did not really finish at the peak. So there was some selling already around. And on the very next day, there was another gap up, but we were blocked by this $54. And you can see that there was another huge volume sell down. So this is not really a good sign, because if the big players are actually selling, and then the volume will start to appear very big and also very red. So it just indicates that the big player may have already sold off. And when we came down, to see that we started to break down with more heavy volume. And just last Thursday, we had this very bearish looking candle, and it's followed by a very high volume. So it's not a good sign at all, because big players may have already left this particular counter, and they'll just continue to feed the media with good news, and that's where all the retail investors are actually continue being stuck in this particular Twitter. So let's take a look at where exactly are my potential supports coming in for Twitter. So my first support obviously will be the $40 psychological support level. This will act as a very strong psychological level. Of course, there's this baseline here, the red line here at 43.53. So 43.53 itself is also a potential support coming in, but I don't think, given this high volume of red sell down, I doubt that this 43.50 will hold in the long run. And the next support, I'm looking a bit the $40 psychological resistance. And last support I'm looking is around 38. So this 38 is very crucial, is because just below the $40 psychological level, retail investors may be putting their stop losses around 39, 38. So these levels is very, very crucial. And not forgetting that Twitter actually created this gap when it actually gap up on the day itself, from a low of 39 all the way to a high of around this low was around 46, and currently the low now was 44. So this gap needs to be closed at from 39 all the way up to 44. And this gap, once this gap closed, then there may be a potential rebound that we may see. So let's take a look at the first wave down followed by the second wave. So the first wave down, you can see that this was a wave down from 54 to 44, which is a downside of around $10. And the second wave that we will be seeing is likely to see us around from a high of 48.50 all the way down to 38. So this is a very potential support area that Twitter may be looking at, considering the fact that we will see this corrective wave coming in. So if you look at the MACD is really turning. It's not a good sign, because momentum has lost, and we also see heavy volume sell down. These two indications that the big player may have already left the game, and the only ones left stuck is the small players or the retail investors. So likewise, the cloud is still very far away, and we should see some support coming in from this cloud support area at around $38 to $40. So if there's any changes, I'll give you guys an update. Thanks for stopping by, and don't forget to subscribe as you'll keep the uptrend on channel intact. Leave a comment below if you have any other stock tip requests. Till we meet again, appreciate the manipulation.